Hi there, welcome to Kneppy Invest. Time for another viewer suggested financial year 23 results video. And in this video, we're going to be having a look at Rectifier Technologies, ticker code RFT. For full disclosure purposes, I am a shareholder of this company. And hopefully, I will be a shareholder of this company for the next 10 plus years. And if I am a shareholder of this company over the next 10 plus years, that is probably a good sign. That is probably a sign this company is realizing their potential, their promise. It's probably a question I have, and more than likely a question the market has on whether this company can realize their promise. But their financial year 23 results was a good step in realizing that potential. It's not the absolute step. I think we need to see more signs this company is moving in the right direction. But definitely, this was a good step in the right direction for Rectifier Technologies, and I'll explain later when we look at their financial year 23 results. Now, Rectifier Technologies, and the reason why I'm excited about this company is exactly what they do. They're in the right space, and it's all involved. They're involved with the EV, electric vehicle thematic, which I think will play out significantly over the next 5, 10, 15, 20 years, because this company designs and manufactures high efficiency power rectifiers and produces electronic and specialized magnetic components. So they're in the right space. This is a growth area. And of course, the question is, can they realize that potential, that growth? Now, the one slight negative, I'm being a little bit nitpicking when I'm saying this, is the lack of marketing from the company and the management. In fact, the company released no presentation or media release with their financial year 23 results, which was a little bit surprising because of how good the results were. You would think they should be shouting, would be shouting their results from the mountaintop. Look how well we did in financial year 23. Market, look at us. Look at what we're doing. Look at the promise we have. But they're nothing like that. All they did was release their financial year 23 results, no media release, no presentation. So I think that's one thing they could fix. They do have to sell themselves. Well, that's not absolutely true. The best way they can sell themselves is financial results. But the financial year 23 results were really good. So added on the really good numbers, the financial results, was marketing, presentations, putting themselves out there, going on shows, on Osbys, those sort of things, just marketing themselves to the investing world. I don't think they're doing that right now. In fact, the last presentation this company released was way back in November 2022 when they had their AGM. Now, their annual report should be released before the end of September. I'm recording this video on Friday the 22nd of September. And the reason I say that is because they released the annual report for financial year 22 on the 30th of September 2022. So I do expect the annual report. And if you do like what you hear about this company, you should be able to get more information about Rectifier Technologies in that annual report. Now, before we have a look at the financial year 23 results for Rectifier Technologies, what are the next 5 companies I'll be featuring in this particular series? So I'll be having a look at Whitehaven Coal, Silk Logistics, which I'm excited to do a video on that company because I have not looked at Silk Logistics before. It's a recent IPO, and I think it's time to have a look at this logistics company. Then Pure Profile, Alcidion, and Perpetual. Now into Rectifier Technologies financial year 23 results, and these numbers were really good. Absolutely astounding results from the company. I probably would have expected a little bit more of a reaction from the market, but the market was quite muted, or the reaction from the market was quite muted, which did surprise me because revenue up 144% to 39.8 million. So beautiful increase in revenue. Profit up 1,212% to 6.5 million. So on a low base. And there is 100% likelihood, so absolute certainty, that profit in financial year 24 will not rise by 1,212%. Because if it does that, that means a profit of this company will be like $600 million, which is an almost impossibility. I will say that. I will give everyone who is watching this video, $1 million if this company had $600 million profit in financial year 24. So it's on a low base. So don't expect those sort of increases in profit, percentage increases for financial year 24. Gross margins, 52%. And I would expect that to improve over the next 5 years. And if it does improve, that will be a really good sign about the competitive advantage and moat this company has. A really good sign, in fact. Now, maybe the one reason why there was a muted reaction from the market comes down to cash flow. So this company actually had negative operating cash flow and negative free cash flow for financial year 23. Now, operating cash flow negative 1.1 million, free cash flow negative 2.2 million, but there are reasons why the cash flow was negative. And those reasons were not negative, were not bad. They're in fact good if you do have a longer time that you're thinking about a company. If your time horizon is longer than 1 year, what the reason why the cash flow was negative is probably a good sign for this company moving forward. And this company is virtually debt-free, a little bit of debt, but not much, $100,000 net debt. Equity up to $16 million for Rectifier Technologies, which means their return on equity is really nice, really impressive, 40.6%. Return on invested capital, 40.9%. And if they can maintain that sort of return on equity and return on invested capital, the returns from this company moving forward are going to be spectacularly high. The question I have is whether they can maintain those sort of returns on equity and invested capital. Shares on issue, probably a little bit higher than what I would like at 1.38 billion, but not excessively high, but just a little bit higher than what I would like. And that means the market cap of this company at a share price just under 5 cents is $66.2 million. Now onto the valuation metrics for Rectifier Technologies, and this is where it becomes really interesting. Another reason I took a position in this company a while back ago, because I do think there is potential that this company is significantly undervalued because of their potential. Now, typically, if a company has potential and they're in the right space, and this Rectifier Technologies definitely fits those two categories, you usually expect a bit of a premium to their current earning. So you expect the PE ratio to be like 50, 60 or 70, but the PE ratio for Rectifier Technologies based off their financial year 23 profit is only 10.2. Now, I think the PE ratio of this company is quite low because of two possible reasons. The first possible reason is the lack of marketing. The market just doesn't know this company exists. And the reason behind that is no marketing. In fact, I very rarely hear this company being mentioned in any sort of podcast. I never see this company mentioned in AusBiz, The Call, that sort of thing. And I think if they can ramp up their marketing, put the name out there, go on shows and that sort of thing, podcasts, this company will be noticed by the market. And that's where you might see the PE ratio of this company starting to climb because they're in the right space. This company is profitable, that sort of thing. So it all comes back to, and this is just an opinion of mine, it all comes back to risk and rewards. So what is the risk of me taking a position in this company right now? Well, it's fairly low, just simply because PE ratio is quite low. Now, possibly this company doesn't expand right now over the next 5-10 years, but it's okay. If they remain profitable, I think I'll get something out of it. But what if this company can realize their potential? The rewards are significant, will significantly outweigh those risks. And it all comes back to the risk reward scenario. Is it symmetric or is it asymmetric? And right now, I think it's asymmetric. And that is another reason why I've taken a position in this company, because I just think the rewards far outweigh the risk right now. Price to sales ratio 1.8, quite low, I think, as well. EV to free cash flow, which is another valuation metric I look at a lot. But it's not applicable for this company because they have negative free cash flow. Now, also did a reverse DCF based off the earnings per share, because again, this company has negative cash flow. And to justify the current valuation, Rectifier Technologies would have to increase the earnings per share at 3.9% per year over the next 10 years to justify their current valuation. Can they do that? I think so. I think, again, the likelihood of this company achieving that sort of growth in earnings per share is there. Again, risk or reward. Doesn't mean they will, but I think the potential is there. And if they can meet that potential, the earnings per share growth will be significantly higher than 3.9% per year. Now on to why there's a difference or discrepancy between the profit and the cash flow. And I think it's very important to understand why a company might be free cash flow, operating cash flow negative when they are profitable. And you can actually understand any sort of discrepancy if you look at the reconciliation of profit to operating cash flow. And this can be found in the notes. Now, if you go to the operating cash flow or the cash flow statement, they usually put a number next to the operating cash flow line. And that number is usually the note where you will see this reconciliation. For Rectifier Technologies, it is note 7. So in this reconciliation, they start at the profit and work their way back to get to the operating cash flow. So you can see why, understand why there's a discrepancy. So the profit for this company was 6.5 million and the operating cash outflow was 900,000. So why was there a discrepancy? So if you look at the change in operating assets and liabilities, this is changes in working capital. You can see a massive negative number under increase in inventories. So this company is ramping up their inventories. And the reason they're ramping up their inventories, well, there's only one answer to that. They expect way more sales in the future. They also saw a small increase in trade and other receivables. They also saw an increase in provision of income taxes, increase in trade and other payables also. But overall, because of that increase in inventories, $12.6 million. That is why there is a discrepancy between the profit and the cash flow of the company. And there's nothing to be concerned about when it comes to Rectifier Technologies. Now, it could be something to be concerned about if this company was retail. Ramping up your inventories can be a bad thing at times. We saw that with Kogan. We saw that with City Chic. They ramped up their inventories too much, and it's biting those companies right now, or it has bitten those companies in the past year or so. I've been following Rectifier Technologies for over 10 years. And during that 10-year period, this company has always had revenue and has always had profit, always had gross margins. Well, every company's got gross margins, I suppose. But the main thing I'm looking for when I look at the financial history of a company is I want to see revenue growing through time. That's definitely true for Rectifier Technologies. And if I see revenue growing through time, then I want to see the profit. I want to see profit growing through time as well. The other thing I like to see, ideally see, is gross margins also increasing. Now, for Rectifier Technologies, we have two things going for it. So 2 out of these 3, we have a tick. There's only one we do have a little bit of a cross, and that is gross margins. But definitely revenues have increased over the last 10 years from 5.3 million to 39.4 million. Now, maybe another reason why the market is a little bit wary about this company is because Rectifier Technologies saw a significant increase in revenues between 2018 and 2019. So this massive jump in revenue from 2022 to 2023 might be just like that period between 2018 and 19. And maybe revenues will drop over the next 3 years, just like they did between 2020 and 2022. But profit, 6.5 million. Company has not seen a year like this. The previous record profit was back in 2019 with 2.1. Now, the only slight negative thing about Rectifier Technologies, looking at this particular chart, is a decrease in gross margins. But I definitely think this company can increase the gross margins over the next few years. And I would like to see the gross margins get towards 60%, like it had between 2020 and 2022. Now onto the chart, and this is just looking at the weekly chart. That's all I had to look at when it comes to Rectifier Technologies. Now, back in 2014, when I was following this company, share price of the company was around 0.1 cent. And then the share price moved into an uptrend back in sort of the start of 2015. Share price popped up, and the share price has been in an uptrend since then. Now, we do see a fair bit of volatility in the share price, but it has been trading in a range. In fact, an upward sloping range. And whenever the share price gets to the top of that range, it's happened about 4 times in the past 7 or 8 years. And right now, the top of the range is around about 8.3 cents or so. And only once in the past has the share price got above 8.3 cents. And that was back in the start of 2022. We also have a bottom of the range. When the share price gets to the bottom of the range, that's a really good time to buy. When you see the share price get to the bottom of the range, 1, 2, 3, 4 times in the past. And the last time I got to the bottom of the range was in October of last year. And that is when I took a position in this company, around that time anyway. And right now, the share price is closer to the bottom of the range than the top of the range. So that's also a good sign for those who maybe want to take an initial position or add to the position in this company right now. That's all I have looking at Rectifier Technologies financial year 23 results. If you have any thoughts, any questions, leave those in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.